giving us that quick update. By the way, let's focus on a couple of numbers. Colgate, that's a stock in focus. It's down closer around 2%. Post reporting their quarter 3 numbers. Manglam joins us to run us through the fine print out there. Manglam?
Well, it's a subdued quarter coming in for Colgate. If you just take a look at the company's revenue, just shy of 1,300 crores. We were looking at a number upwards of 1,300 crores. 1,330 odd crores is what we were expecting. The EBITDA of the company has come in at 360 crores as against CNBC-TV18 poll of 390 crores. So that has missed estimates as well. Margins too have missed estimates by about 150 odd basis points. The net profit has come in at 243 crores. But that as far as the reported numbers are concerned. My sense is that the volumes have declined in anywhere between 3 to 4 odd percent because the company had taken about 4 to 5% price hikes. If the revenue has grown just 1% year on year, then that would imply a volume decline. However, two things that really stand out in terms of numbers. The first one is that the gross margin decline has moderated. So versus 300 basis points that we've seen earlier, the gross margins have declined about 80 basis points. So that's telling you raw material inflation has begun to improve, or the situation has begun to improve. And secondly, EBITDA margin has contracted about 170 basis points, but a large part of that is primarily on account of the company spending more on advertisements. So advertisements as a percentage of sales have increased by about 140 basis points. So let's see whether the new MD's strategy actually plays out in terms of performance over the next few quarters. I'll be watching out for that. The stock currently at the low point of trade, but trades at a discount to other peers at around 30 times FY24 earnings too.
Okay, 30 times earnings, but a discount that tells you a lot about the FMCG space. Thanks, Manglam, for that. Let's exactly take that point forward with Mehraboon Irani. He's joining us on the show today. Mehraboon, great to have you with us on the show, and it feels good to be back to talk to you as well. Been a while. We have lots of stocks to discuss, but I do want to start with Colgate and the point that Manglam just made. The fact that it's not as expensive as the others, though this quarter is not really inspiring too much confidence. Would you sort of look at buying in at all, or would you look at other bets?
Well, at the present price, which I heard Mangalam say that, first of all, Surbi, I think it's always nice speaking to you and nice to speak to you after a very long time. I think as far as Colgate goes, I think this is not a stock which should be bought in a hurry. I'm personally holding it for the last many years, and I consider it to be a part of my core holding. And the fact that the stock is absolutely underperforming over the last few years. Am I in a hurry to sell? Honestly, no. If you call it a core holding, you don't look at it. The stock at the present level certainly gives a lot of comfort in a market in which, honestly, there is a lot of uncertainty still. Relatively, India is expensive as compared to quite a few other markets. So at 1450, 1460, whatever the price would be right now, I think if somebody buys it, there is nothing honestly to worry. But this is not a screaming buy by any standard. I think Colgate is a company which is working very hard to retain its market share. So we will see advertising costs keeping on going up with the new CEO in place. Let us see as to actually what happens. But at the price at which it is, I don't see too much of downside risk, but certainly not a screaming buy by any standard in the present scenario of the market. Do I understand from sources in the industry that rural and semi-urban demand on the whole for FMCG sector, FMCG stocks, I think it's a positive because demand is looking up after a long time.
Okay, Colgate's market share is almost 3x that of its nearest competitor. Very high penetration, market recall, brand value, etc. But let's talk about Maruti. That on the other side is reacting to a strong set of Q3 numbers. Sonia's here with the complete fine print. Sonia.
Well, thanks a lot for that. As you rightly pointed out, very good set of numbers coming in from Maruti, much better than what the street was estimating. The big beat came on the margin front, and that's not just because of lower raw material costs, but across the board, employee costs, other expenses were all lower, and margins came in above 9% for the second consecutive quarter. It was a gain of 300 basis points year on year and 40 basis points quarter on quarter. But the raw material tailwind is a big one. So if you look at it just for this quarter, raw material cost as a percentage of sales was down 310 basis points year on year. And revenue growth as well, solid, no complaints at all, 25% growth, EBITDA growth almost 82%, and profits more than doubled on a year-on-year basis. Now, the management said that there were a couple of things that aided their performance this time. One was cost reduction efforts that they undertook. They saw improved realizations, favorable foreign exchange variations, softening of commodity prices, and higher non-operating income. In the negative factors, they said that there were higher sales promotion expenses. Of course, as we know, they had a couple of new launches as well. well. So that marketing and sales expenses hit their earnings a tad bit. The company is also very bullish. They have a very high order book at the moment, out of which from a 360,000 order book, about 119,000 is just from their new cars, the new sales that they've seen. So all in all, good set of numbers, and the stock is one of the big gainers today.
Thank you very much for that. Mehraboon, 2023 is going to be a big, important year for Maruti, right? We'll know whether finally those SUV launches that Maruti is betting on and gunning to get its market share back up will work out or no. Thoughts on Maruti? Would you wait for the proof to be in the pudding, wait for the launches and the reception, or would you buy ahead of it?
Well, I would like to state 2 or 3 points in favor of Maruti right now, and I heard Sonia speak about it, and I looked at the results also. I think absolutely no complaint with the results. I think it was a beat on many parameters as compared to the expectations. Also, as far as the auto sector goes, I think a year and a half ago, we were talking all the time about supply side constraints. Most of these problems possibly is behind the sector right now. Demand on the whole is still holding good. The order book as far as Maruti goes is quite good. Commodity prices coming down, advantage as far as raw material cost goes, improvement in margin, all this is now getting reflected, certainly yes. As far as the entry into the SUV segment goes, I think they launched 2 models, I think Fronx and Jimny at the Auto Expo recently. They already started accepting the orders. And the point in favor of Maruti, and a very strong point, is that success rate as far as new launches is much higher than the overall industry average. I think it's over 70%. Over the last 10 years. And I think this should augur well for Maruti in helping it regain market share. So if the market share says 43 or 43.2% right now, one can possibly expect it to go up to around 45% or slightly higher over the next 2 years. So all these are very positive. The question is, should I buy Maruti in a hurry? I think if one expects an earning per share of around 260 to 280 rupees in 2024, at the valuation at which it is, in a market in which I personally believe cash is going to be king for some time to come, I think I won't be in a hurry to recommend the stock at the moment, though there's a distinct possibility that if the market, for whatever reason, including the budget, if it tries to make a new high in the interim period, I think Maruti also could possibly go and scale a new high. I'm not ruling it out, but yet, despite all that, as I mentioned earlier, cash is king, and I would prefer to do the waiting game for a large part of the market, including most of the auto stocks, and that includes Maruti too.
Got it. Mehraboon, hi, good afternoon. I don't know if you're a wine connoisseur,
Hi.
but I don't know if you put your mind to Sula. It's like the only player in that category, in the listed space. I don't know if you can categorize Sula as the product is premium, pricing is premium or not. I mean, that depends on how you look at it. We had the management recently with us, and they were, very clear that they want to expand the market, most definitely. So pricing, it will not go up. It's perhaps has to be more affordable. But have you looked at the business? Any thoughts?
Well, when the IPO came, honestly, I think it was not a very bad IPO, neither a great IPO. I think at the price at which it is, I give it a clear pass. And I think in this particular segment, if you ask me, in alcoholic beverages on the whole, if you ask me, I think a stock which attracts my attention, though I'm in no great hurry to buy it, is United Spirits itself, a stock which I have not bothered to look at positively for the last few years. I think at the level at which it is, I think considering the fact that what has happened to this industry, the premium segments, prices have come down. I know for sure that McDowell's, that is United Spirits, is concentrating on the premium brands. The smaller brands have been given away to somebody else to manage at a particular fixed type of income for them. So I would say that if something excites me in this space, it would be United Spirits at number 1, number 2, number 3. And Sula or even the other companies which are listed in the market, I think I would not be too much interested in. Though there is one stock in the space which, because of a lot of corporate action which took place, I think I am personally holding it. Clear disclosure is Tilak Nagar Industries, which I'm quite positive on. As far as Sula goes, I think valuation-wise, I was not very comfortable at the time of the IPO. And I have not heard the management interview on your channel so far. But as a result of which, I would give a recommendation on this particular stock a clear pass right now, Prashant.
Okay, all right, Mehraboon, quite an exciting, list of picks you just spoke about. So we'll keep all of them in mind, but request you to hang on for the time being. We'll slip into a short break. You come back We'll focus on the market technicals. Jay Bala of Cash Chaos will be joining in.